Uh-huh. Let me know if you guys can hear me. Testing, testing, testing. Oh, I can't even adjust the volume on this. How is this even possible? Is there a... Well, that's one thing I just noticed. Where do I adjust the volume on this? Really? I can't seem to find out where to adjust the volume. Okay. Great. Brilliant, 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 brilliant. Okay. Let me know if you guys can hear me. I am just trying to test things out here. I have new headphones. So far, so good, I guess. Gonna lower the music down a little bit. Let me go ahead and lower the music a little bit. Wait, I think that's it, right? Huh. I'll play that again. I like that. Alright, I guess I'm gonna have to lower it from my end. Okay. Alright, so what's up? Here goes honey. Making noise when you should be going to sleep. Come on now. And welcome back to an evening edition of the live stream here in the Lion's Den with yours truly, Lion of All Trades. Welcome back. Hope you had a wonderful and safe 4th of July weekend. I wish this weekend could have been a lot longer. Could use a lot more rest and a lot more time to think and brainstorm and figure out what on earth is going to happen next this week in the markets. That is the $1 million question. And let me just start off, as usual, as always, by saying that the stream is just for education, research, and entertainment purposes. I do not, and I repeat for the record, do not pump stocks. I do not push, promote, and I don't tell any of you to buy, hold, or sell your positions. That is your decision to make. You are your own decision maker of your investments and what you do in the markets. Always do your own research, do your own DD, and always manage your risks when trading, depending on what kind of trader you are. And what I like to do is just simply do some research, look at what's happening on the charts. We all learn together, we all thrive together, and we all win together, as long as we are on the right path towards a better, wealthier future, and for generations to come. Anyways, so I'm just gonna lay it out here right now. If you're watching this, I'm not gonna name names, but I'm just gonna say right here, I am not the one. I'm really not the one. And I am usually a very kind person, very respectful. And listen, whoever decides to talk bad and decide it's okay, listen, it's all about karmic energy. You treat others as they treat you. So if you treat somebody with that energy, you are going to get back. And I guarantee you, you are going to get back that energy. And that's all I'm going to say. And we're just going to continue doing our thing regardless of what is being said. I want everybody to be at their best. I want everybody to succeed. I want everyone to win. I wish everyone the best. Matt, you be back in 5? Got you. No worries. Take your time, bro. Good to see you on here. I'm always experimenting. Again, my backstory, alright? Been involved in the market since February of 2021, thanks to my friend from high school who told me about the markets. If I would have known earlier, I probably would have taken advantage of the bull run back in 2021. Well, before that, during the pandemic and all of that and such. But does it mean that I'm late? Not necessarily. It's never too late. And there is no right or wrong way of doing things. I mean, we all know that whatever direction the market decides to take, we can't be biased. And we have to make money in either direction, wherever it goes, right? So, this is not about, oh, we're going to follow this stock and we're going to pump it and this is the only stock that matters, da 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 da. Like, nobody else be talking about any other stock but this stock. And I'm going to promote and I'm going to pump and this and that. Like, no, this is not what this is about. And I'm not trying to get in trouble. All right, this is just for entertainment purposes and research and educational. And we're all learning together in this. And after that, we leave the stream and we brainstorm. We do our own due diligence and we figure out what our next move is going to be. Plain and simple. As long as you benefit from the information and as long as you become successful this week, which I wish you all the best this week in your trading sessions, and that includes myself. Just a regular old guy here. I don't need to be connected to anybody. I don't need to be affiliated with anybody. I don't need to promote anyone or any company. Nobody has ever approached me. As you can see, I am not even that big of a deal to begin with. I only have 674 subscribers, which is fine. I'm not here sitting desperately asking everybody to hit the like button and to desperately subscribe. And like, if you like me, then, and if you like what I do and you like this environment and the music and all of that, then I appreciate you and it means a lot. If not, then it is what it is. I'm just being straight up. I don't care who you are. I'm talking about the ones that decide that it's okay to talk the way they do. But anyways, let's get to the bottom of this whole thing. It's Let's do some research. I did find some interesting things, some updates, of course, some small cap stocks that we all know of, massively shorted. Finger licking good. For example, Finger, um, AMC, GME. We could go over Wolf Speed. We can see what's happening with the rest of the markets, futures, precious metals, oil. Just take a look at current events and see what's going on. Hopefully you guys can be able to hear me well. So just let me know, just in case. And I can go ahead and move on with the stream. It seems like when futures opened up, there has been a gap to the upside from the time that futures closed. As you can see on my screen, this is the SPY, the S&P 500 E-mini futures, tracking the S&P 500. It gapped up as soon as futures opened up at 6 o'clock p.m. Eastern Time, and went as high as 6,313. And it's actually weak. It's weak. It's coming down. And it's retesting the 200 SMA as support. As you can see, there was a previous bounce off here, and it looks like it's not enough to keep this market up. So let's see what's going on here on TradingView on news. 3 hours ago, by Trading Economics, U.S. futures slip as tariffs set to take effect August 1st. So U.S. stock futures edged lower on Monday after President Donald Trump confirmed that tariffs will take effect on August 1st. So just keep that date in mind. Commerce Secretary Howard Lutnick stated on Sunday that the new duties are scheduled to resume next month, adding that the president is currently determining the final rates amid ongoing negotiations, an assertion Trump affirmed. Earlier in that day, Treasury Secretary Scott Bessent stated that tariffs would revert to April 2nd levels if no trade deal is reached by August 1st. Trump's 90-day reprieve on reciprocal tariffs, originally set to expire this week, has been extended due to stalled talks. So last week, the S&P 500 and the NASDAQ Composite rose 1.72 and 1.62%, respectively, both hitting fresh record highs on optimism over easing trade tensions. Dow Jones also gained 2.3%, approaching new all-time highs. Looking ahead, investors are eyeing the upcoming earnings season for new market drivers. We're going to go and take a look at Earnings Whisper's Twitter page, and we're going to find out what earnings is up next this week, the week of July 7th. And it looks like there isn't much going on. I am actually surprised. Let's take a look at this this image. Oh, what up, Eric? Ricky Martin. Thank you for listening, as always. Hopefully you are doing well. And you and the fam. And I hope you enjoyed your 4th of July weekend as well. How's everything, brother? Look at this. That is an interesting ticker symbol. And not to mention the name of a company called ASS. Are you taking notice of this? Can I even zoom in on that? Oh, I can. I can. Oh, I can't even. Oh, okay, whatever. So, all right, reset. So there's no earnings for Monday, but there's earnings for Tuesday after close, which include Penguin Solutions, Cura, Saratoga Investment Corp, and AEHR Test everything test systems. Wednesday after close, we got ASS, ticker symbol AZZ, not ass like ASS, you ass. And then you have Bassett. Thursday before market open, we have Delta Airlines, Conagra Brands, Berna, Simply Good, Helen of Troy, and NTIC. Then after close on Thursday, you have Levi, WD-40. I mean, you definitely need that WD-40 to get, to loosen some engines there, some joints, some door hinges. Price Smart, E2 Open, and Vista. And Friday there's no earnings, so very quiet this week. Burn, PEP. Wait, hold on. What am I? This guy said Grok. Is Monday a stock market holiday? Stock market is open tomorrow. Hello. 4th of July was on a Friday. Hello. Anyways, let's see what else is going on here. Huh. Ass. Alright, you have a big pullback on SPY just 5 minutes ago. A big drop from 6,298.50 to 6,294. So we are definitely seeing some effects here. Probably from the news that we just read on those tariffs that are set to take effect on August 1st. So yeah, we're definitely going to see a lot of uncertainty. I'm guessing for this month, leading to that date. The Hang Seng is down, also negative 0.41% with a gap down there. You also have, we pretty much see the same thing happening there. But in other news, though, Bitcoin is retesting and trying to come back up to that 109,800 level. If not, perhaps it's trying to make its way back up to 110,000. If you take a look at the 4-hour chart for Bitcoin, we do see that there has been a heavy resistance around that range, around above 110,000. So it has suffered many retests, yet rejections from May 21st, 2025, around the end of May, around June 10th, and also around July 3rd on Friday, where it also rejected from as high as 110,548. So we don't know what is to come, but I'm pretty sure with futures coming down, I would like to think that Bitcoin would do the same thing, but as for now, it does look like the 4-hour is a little bullish there. So if it breaks 110K, we could be seeing a bit more upside potentially for Bitcoin. Not financial advice, in my opinion. And I see a lot of green on the board here in the crypto market. Um, Especially the ones that are usually talked about. For example, XCN, a coin that Chris with a K, shout out to him, who's brought to our attention for the longest. And that looks like it's trying to break through the 200 SMA. You could see how the momentum is shifting toward the upside. The Ichimoku clouds, the Ichimoku oscillator is also showing a rebound here. Could be looking for a lot more upside potentially, and for a retest in the future back to 2 cents NFA. And that is if it does break over that 200 SMA. Also here, which looks pretty nice on the daily chart too. More like an uptrend. More like an uptrend here. And could be that it's going in this supposed channel. So let's see, maybe not quite a channel, but let's see, maybe an ascending triangle. And if that's what's happening, we'll take a look at XLM, and we'll see that it also has a nice little rebound there. Ichimoku oscillator here going into green, while the 13 EMA on this yellow line is also climbing up, which you would like to see. Also, with that being said, the 9 EMA, 20 EMA crossover, if the 9 EMA, I'm going to be repeating this so many times throughout all the streams, so until you get it, until you know. So once you see it cross like it did over here back in April 22nd, where XLM did rally from 23 cents all the way to as high as almost 30 cents. So you see this, how this all follows, how it crosses over, how the 9 goes over the 20, and you see the little green plus symbol there, which means that it is a bullish crossover. After that, it showed nothing but upside from there until it reached the 200 daily SMA, and you had a couple of retests from there. Then we had a bearish crossover May 29th. So it's funny because it actually took a month for that to all start coming back down. And now we're up to this point where everything is starting to come back up. And hopefully if, and only if, Bitcoin also decides to climb back up past 110,000 and beyond, and bring and drag all of the alternative coins up with it, which would benefit for sure. XRP is also doing something similar, but it's a little bit weak, and it's hanging underneath that daily SMA, 200 SMA, and it would of course need to break over that, but for now we have to see if it rejects and if it falls back down below 223, which I'm going to place an alert there, and also for 215. Right, still a lot of uncertainty going on there. Then you have XDC, which looks like it is also rebounding pretty nicely. We do see the 9 EMA crossing above the 20, and the green plus symbol. So we do expect some type of upside potentially, and retests of 0.064 to 0.067. So XDC making some moves there. Let's see what else. What is up right now? Looks like the SPX 6900 on a climb here from 93 cents. Took a big sell-off here from June 11th when it was at 174, and it came down to 92 cents. Now it's trying to rebound from there. For all you SPX 6900 lovers, blubbers. Doge on a interesting rebound here too. Could be a nice swing potential if you like to swing trade stuff and try to retest 24 cents. A smidge. You got flare down a smidge, huh?
You got flare down a little smidge right there. We got a little smudge right there. He's gonna put up a little smidge, and you know what I'm saying?
Yeah, actually, the flare is slightly down, barely green, 0.36%. Trying to stay green, but yeah, for some reason the 9 EMA it's actually a bit separated from the 20, and it's trying to it might be coming down a little bit more. If it does cross below 0.016 and try to retest 0.015, then you know that there is somewhat of bullish activity. But then I'm looking at the daily, so we just have to see what that looks like here. But that can all change. Here on the 4-hour, you can see that there is definitely some momentum shifting back to the upside, and right above the 13 EMA here, also trying to climb back up. I think Flare is another excellent token that I've been reviewing, and thanks to E. Martin here on the chat, Lions Den fam, with the information. I appreciate that. Again, Eric has been talking about Flare for a good minute. Mucho, mucho. We're talking about Flare since October 2nd of last year. Just in a few months we'll make a year since we've been talking about Flare, since Eric had brought Flare into the Lion's Den. So at that time it was actually trading at 0.0164 October 2nd. So it's actually back to where it is right now, believe it or not. So go back to the daily, October 4th, literally right here. It's literally right where we started. Look at that. And the lowest that's ever gone was 0.01084. That's crazy. But the only thing, unfortunately, and I just hate New York for that, and the people that are running New York, not being able to let New York citizens register and have an account with Uphold so we can be able to buy XRP and all that stuff. I'm pretty sad. I wish I knew about that, and I wish I could have had a chance to get some of those Flare airdrops. That's why at times I think about it. I'm like, man, maybe I should have stayed in Newark. Yeah, I should have stayed in Jersey. Anchor Network. It's like the worst BS ever. I have no idea how they can get away with that and not being able to let New Yorkers um, even trade alternative coins, and specifically ones that I'm pretty sure a lot of people would have benefited if they were able to be allowed to trade XRP and other alternative coins early early in the. I mean, when was it? Hold on, let me see. Let's see. Probably find out from here. If only look at this, April 24th, 2024. If only the main crypto exchanges in my state would allow me to buy these altcoins like HBAR, XRP, and others. Isn't that crazy? And then I think eventually here, yeah. So it's gonna be almost a year since they listed XRP on Coinbase. I'm like, I couldn't do it because I didn't have access to XRP until a few months ago. Now listed on Coinbase and able to buy legally in the state of New York. Crazy. And not even. It was only New York and I believe another state that didn't allow people to buy XRP or other coins, and that Uphold wasn't available. Like so mad. Like really? Unless unless Coinbase wanted to take advantage of New York and be the only one available to list XRP and the others and be able to trade. Because look now, they have XRP, they have HBAR, I'm pretty sure they have XDC. Yeah, it's been our subject for ages, man, and it sucks. You know, I mean, I'm glad they have it. I mean, I'm glad they were able to list it on their exchanges before it ripped like crazy over $2 or even over $3. Um, and after Trump got inaugurated and crypto went on a huge bull run, then yeah, that would have been definitely it would have been a great opportunity, in my opinion. But but now, and I'm just looking at Coinbase right at this moment on my phone. Um, why do I still have public on here? I gotta delete that. Um, let's see. Let's see. XRP at number 4, ranking at number 4 on Coinbase. Coinbase needs to what? Okay, there you go. XDC. Let me see. Is XDC? Oh, XDC network is not tradable on Coinbase. What a surprise. Let me look at XCN. XCN Onyx coin at 110 ranking, but oh, you can't even buy on Coinbase here. I have to trade it on the Coinbase wallet. Goodness gracious, what is this? Other where was that? That was that Weeble? I mean, I know Weeble stopped trading crypto, and then they have Weeble. What was it? Weeble Pay. Yeah, it's freaking ridiculous at this point. Oh, I gotta install Uphold. Not install, but I gotta update it. What are the fees like on Uphold? Ooh, 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 do, 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 ooh, do, 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 ooh, do, 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 do. What's in together on a ballroom tonight? Baby, 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 don't you know? Don't you know? Don't you know? Don't you know? Now step along me, now step. Whoop, whoop. Eyes with me. I mean, the exchanges, I mean, they do need to make their money somehow. Whether it's commission fees, exchange fees, you know? No, se volvió y se volvió un río. Ah, bueno. Could you advise on the best ways to deal with a surplus of clams? Yeah, I don't know about that, bro. I can't help you on that since I've never had it before in my life. But I thought you worked in a lab. Wait, I thought you work in a lab. I'm pretty sure you can make something on there. They also have fair staking rates. Ooh. Speaking of H bar, man, I really want H bar though. Those are the only three that I can honestly safely buy that I don't need to worry about is H bar, XRP, XLM. Oh, he would definitely know. I think that's the reason why he never had a girlfriend. Really, he did. And I hope he gets clamado. Piece of shit. Oh, if I invite a friend, you both get $30 in Bitcoin. That'd be nice. I only have 8 cents on. I only have 8 cents on my Coinbase. Just for transparency. I'm holding no coins, unfortunately. Just letting you know right now. But first I want to be able to. I just want to focus on stocks, and then I want to be able to focus on crypto later on. And I really do want to do that. I really want to do that challenge officially. And I've seen a lot of videos, but I'm gonna do it my at my own pace. And obviously, I don't make enough a week, but something is something. And what I'm talking about is yield max. And I really do want to. I really do want to do that. I do want to do that. I want to do. I want to do. Want to do. Want to do. Jesus Christ. Oh my God. Not for nothing, but yeah, H bar. Whew. Also, I gotta find out because I remember last week. What do we got over here? 5. Hit that like button. Yeah, dude, I want to get into ulti. My combination, I want to. This is just what I'm deciding to do. But as you've seen in the conversation, ChatGPT, I'm thinking of doing a Misty ulti combo. But I think it will be pretty sick because, oof, yeah. Because look at where H bar is at right now. Like currently, it's at a. I mean, it hit like two bottoms here, and in April and end of June. This could be a very interesting entry point for accumulation, and then from there, if it breaks over the 200, the daily 200 SMA, I think that's all she's gonna rate, and it could even if it 4 times that even if it reaches back to that all-time high or the 52-week high of 40 cents, that's a over 160% gain. So what I want to do is pretty much, I mean, like if I can be able to get to 1,000, because that's I was thinking about starting with 500, but I actually honestly want to start with 1,000 better, and then from there, um, start alternating every week. So I'll put like 200 in Misty, and then the next week I'll put 200 in Alti, and back and forth. And then whatever I have left over, like I'll focus on doing some options and see if I can make something out of that. And then if I get a lot more powder, I'll take like a portion of whatever powder I have, and then add it to my two positions. And that combo, oof, especially with what we're hearing with crypto in general. But I have to tell you though, because when I was doing more um, when I was doing more research and using ChatGPT the other day, actually, as a matter of fact, I did this yesterday or the day before. Um, and I had a question. And I'm like, I'm looking at this screenshot that I took. When was it? Okay, so it was yesterday. Okay. So I pretty much asked if ChatGPT can give me an analysis as to why Misty is performing bearish than its underlying stock MicroStrategy, as it looks bullish above the 200 SMA, and in respects to how Bitcoin is performing currently as of July 5th, right? So it broke it down for me, and even though, unfortunately, because like I've always said, and it says it on the bottom of ChatGPT ChatGPT's page, that ChatGPT can make mistakes. You have to constantly correct. You have to constantly correct ChatGPT and feeding it the right information, the right current information and data, in order for the responses to be a lot more accurate. of course, in speculation and in my opinion, not financial advice. But pretty much, it says here that that what we were looking at here on the screenshot, it's a classic divergence between a yield-focused ETF and an underlying stock. And despite both being tied to Bitcoin's bullish momentum, um, you have MicroStrategy, which had closed at 403.99 on Thursday, and trading above all moving averages, including the 200 SMA, which is a bullish structure, and recently bounced off the 370 to 380 zone and is pressing higher in sync with Bitcoin's rally. But Misty, which closed Thursday at 2089, had been in a downtrend since December 2024 with highs of $44 a share, now trading below all major SMAs. Each distribution, D icon, coincides with minor price drops, and despite some relief bounces, the structure is bearish overall. Now, here's the thing, because remember, it's not because Bitcoin is on a rally and we're gonna get more dividends, distributions, because Bitcoin is actually going up and Misty is going up with MicroStrategy. No. Remember that Misty and all Yield Max's ETFs all do covered call strategies. And because MicroStrategy, along with Bitcoin, is going back up potentially, unless there's something that happens and all of a sudden it starts dropping. I could be wrong, but let's say in theory that Bitcoin starts performing even more and continues to climb up above 110,000, 112,000, 115,000, let's say, then MicroStrategy follows with that. And let's go to the chart right here on the 5 minute on on Webull actually. Wow. All right, so you could see the high for MicroStrategy was at 414.60. You're dropping as low as 399. Now, let me look at Misty real quick. Wait until it loads. You can see it kind of follows the same way, although it's a little bit up right now currently at 2090, but so it questions why Misty is underperforming MicroStrategy. And the talk about covered calls and drag in bull markets, Misty generates income by selling covered calls on MicroStrategy. And in a strong rally, like we're seeing with MicroStrategy at the moment, these calls often get called away or capped. So the ETF sacrifices upside potential in exchange for income, causing NAV decay or net asset value decay when MicroStrategy surges. And the result is that when MicroStrategy rallies, Misty lags or even drops. So in short, covered call ETFs underperform in bull runs because they quote unquote sell off future gains in advance. Then number 2, it says erosion from distributions. If you're wondering why the dividend payment or the dividend distribution is coming out lower than expected than before, it's because each month high yield dividend payment reduces Misty's NAV. Even though you receive cash, the ETF price drops mechanically after every distribution. If the income generated via options isn't enough to offset this, and the ETF doesn't benefit from micro strategies rally, Misty trends down. So number three, you have volatility and premium compression. Excuse me. So if MicroStrategy volatility decreased even slightly, despite the price rising, the options premiums shrink. This results in lower income for Misty and lower yield to support the price. And it may cause selling pressure or lower investor enthusiasm for the ETF. Now, you already know with covered calls, you're selling the contract, you're selling the right for somebody to buy your contract and exercise their contract for 100 shares of, well, your 100 shares that you're selling to them in that contract for whatever strike price. The whole point is to make sure that those covered calls or those call contracts do not go in the money. And if they go into money, then they have the right to exercise, and you have to cough up those 100 shares. And therefore, you don't, on top of all the premium that you get, you kind of lose out. And from what my understanding, um, from my understanding, that's how they make a lot of their premiums. As long as their distributions are high because the contracts are not going in the money, and then they'll be able to use that to distribute dividends and raise the price and blah blah and all that stuff. You get the point. So Bitcoin's current trend as of July 5th, this is wrong. While this supports MicroStrategy's uptrend due to Bitcoin holdings, the lack of explosive movement in Bitcoin may keep options premium moderate and prevent Misty from benefiting through options-based income. So these are the key metrics to watch going forward. MicroStrategy's implied volatility, bullish Misty signal, then it says rising equals better premiums, Bitcoin price, rallying equals lifts MicroStrategy's baseline, MicroStrategy trending sideways. Here's the thing, if MicroStrategy trends sideways, it's more ideal for Misty to collect consistent income. Then the monthly Misty dividend. Stable or increasing distributions help support Misty's NAV, and options open interest on MicroStrategy. High open interest equals healthier option market for Misty to extract its yield. So Misty is structurally disadvantaged during strong bullish trends in MicroStrategy and Bitcoin due to covered call strategy capping gains, NAV decay via distributions, lower volatility compressing option income, and market rotation into higher beta plays. So it outperforms in choppy or sideways markets when MicroStrategy doesn't break out aggressively, which is ideal for consistent premium generation. Now I had to update the chart here. The bullish bias for Bitcoin, it has room to expand further in supporting MicroStrategy's strength. All right, so here's another example of why Misty remains weak despite Bitcoin and MicroStrategy's rally. The first factor, if Bitcoin goes up and MicroStrategy goes up, the impact on Misty would be good for asset base, but if MicroStrategy rallies past strike prices, like mentioned, for those covered calls, if it goes into money, covered calls get exercised, which caps gains. So that means they won't be able to distribute even higher income or distribute higher dividends to be paid for investors. And speculation, of course. I'm just from my understanding. Lower implied volatility in Bitcoin and MicroStrategy means that for Misty, option premiums fall, which would lead to lower income. Frequent distributions will be a NAV drain, especially when growth is capped. And the bullish investor sentiment um, says here the impact on Misty, rotation into direct MicroStrategy or Bitcoin exposure for full upside. So while Bitcoin and MicroStrategy are thriving, supposedly, Misty can't keep up due to capped upside from sold calls and is losing NAV with each payout, again, net asset value, and isn't collecting large enough premiums to offset this in a strong trend. Ya know, Maximilian, outstanding. What's up, boss? So, let's see. Yeah, but that could definitely be a interesting combination using Misty and Alti. Ideal market for range bound or mildly bullish Bitcoin and MicroStrategy for yield seeking and willing to accept volatility. And the risk reward is high yield, capped upside, and high drawdown. And for Alti, you have an ideal market that includes a volatile but non-directional equities, investor profile, consistent income, lower risk preference, and risk and reward, moderate yield, diversification, and lower drawdowns. So let's see. You're gonna put 100% into Railtown tomorrow? Okay. Oh shoot, Danny. Really now? Oh shoot. Yeah, what's good, Danny? So yeah, I'm pretty much like I'm just gonna do my own thing, dude. I'm not even gonna. I'll probably sneak into his stream once in a while and see what he's talking about, but I'm just not gonna involve myself in there at all. Like for real. That he has no idea like how bad he's looking. The fact that he has the gall to disrespect me, and oh, I mean, it's really nasty, man. I I I respect them in some views, but really nasty. I really don't like. I don't like that. Like he just went off like half of the stream because of something that I said about finger technical wise, and not even claiming anything. And on top of that, I don't even remember anything about HNRC. But I could look back and see if I did mention about the stock. I can always fact check and go to previous streams back, what, 2 years ago, three? I don't know. I can't remember. I wasn't even pushing any idea about dividends or whatnot. But anyway, Danny, welcome back. I know I haven't seen you in a while here. Let me know what you want to talk about. We can go ahead and we can do research right now. I won't be on for a lot longer because I do need to wake up for work tomorrow morning. So, but with that being said, so I wonder if it's possible to get railed by Railtown. Um, Juice. How do you even say that name, dude? But anyways, yeah, I'm just like going over a strategy that I'm planning to do. This is something that I I'm deciding to do. Y'all can do your research. I'm pretty sure y'all heard about Yield Max and all the ETFs and all that good stuff. I'm planning. What I'm telling you, not financial advice. I'm going to be when I get 1,000. I'm gonna dedicate the strategy, um, which is gonna consist of Misty, MSTY, and things could change depending on what Bitcoin decides to do. But I'm gonna plan to do Misty, and if it drops even lower, then hey, so be it. Might as well. And gonna I'm gonna also do Ulti, ULTY, which looks like it had been bottoming out for quite some time, and I think it looks pretty attractive where it's at right now, in my opinion. So, and it pays out in weekly dividends. You can see it did get cut because, um, pretty much like a split compared to a monthly dividend, which was a lot higher, but a weekly dividend is going to be cut by a lot, which it had been paying every week around between 8 to 11 cents, 9 cents currently, almost 10 cents. But I'm pretty sure it builds up from there. The more you accumulate, and the more you just leave it growing and compounding and snowballing. As long as it stays stable, as long as it stays consistent, and what I'm just gonna be tracking. I'm just gonna be posting on Discord, and just to track the progress and see what happens. Because honestly, I've been getting smoked on options. Dude, you have no idea. It's been a struggle. It's been a struggle, and I'm just trying to learn, just like everybody else. Just an average investor. So that's my idea. There could always be another combination, between Misty, Ulti, or you want to add SMCY for semiconductors. I mean, you gotta play, with whatever the market is doing, and follow the money from there. You know. Now, I'm gonna move to Finger real quick, just because we were on the subject of William, and I'm just gonna share my opinion and what I'm seeing. I don't have to be right, but I would like it for. What what the hell is going on with this water, bro? I need to stop drinking from plastic bottles. I swear, I took a sip and I feel like my throat is like, like scratchy. Oh Lord. Oh shoot, I forgot my cinnamon bun. Anyways, I know I haven't discussed Finger in quite some time, and before I was covering pretty much like what happened before the rally started, and I can definitely go back and pretty much figure out what's happening on Fintel with Finger. Oh, okay. Yo, Eric, you got it. And I'll be posting a lot more info. Damn, you're about to miss this one info that I'm about to talk about. Something that I actually noticed last week. I forgot when it was. I don't know if it was Thursday, Friday. It has something to do with AMC. And I also have to check GME to see if it's actually doing the same thing on Fintel. and it has to do with the days to cover. Just like how we spotted fingers and days to cover spiking on a daily basis, almost on a daily basis, and then after that, when it started to come back down, then you have the cost to borrow spiking as the days to cover dropped, and the short shares available or the shares to lend drop. And what's interesting to me is that 2 hours ago there were no short shares available for finger to lend to borrow, and then an hour ago they dropped 400,000 short shares again. The cost to borrow for today, or for the 7th of July, it's going to be at 23.07%. So it's not as crazy as it was before, back in the beginning of June, I believe. Was it beginning of June? No, actually it was damn, it's been that long already? I think it's been, okay, so I guess the month of May, when it was pushing really hard. Um, and then I think it went up to like more than 400% cost to borrow fees. Um, you could tell because like after the rally and all the sell-offs took place, and the shorts and all that you can, pretty much list, then left this gap on the daily, which I was talking about on William's stream, and not stating that, and I'm not claiming that it's gonna go back up and it's gonna squeeze and it's gonna do all this stuff that he says that I was saying. Um, quite frankly, like, that is not my forte. But the fact that I'm looking at it from a technical perspective, from a chart perspective, you can clearly see that it's been holding since June 20th above the 200 EMA. I mean, the daily 200 day simple moving average. And it's consolidating. And in the last two daily candles, you see a bounce from 194 on Wednesday to a high on last daily candle of 208. So that to me is a pretty nice jump. All right, and it's just testing the 9 EMA, and it could be possible. All right, and if this bullish case scenario plays out, in my opinion, with possible volume coming back in and options volume, which I may include, then we could see potentially more upside this week. Not financial advice. I guess I gotta say that, right? And if it starts to surge, even better. So then you have two levels to look out for, all right? You either look out for 215, and then if it breaks over that, then you look out for the 20 EMA at 224. We'll round it off to $2.25 on that level. And if this week is successful in breaking those levels, in my opinion, then that is freaking bullish to me. Something's happening. Not only that, you would have to include the days to cover. If it spikes up even higher, we possibly have another repeat of what happened before, back in May, all right, or the end of April, where it also tested that 200 SMA and held as support, and then started going crazy, right? And not only that, but then once the whole thing starts happening again, and with the days to cover coming back down, and on top of that, the cost to borrow spiking up back to um, the hundreds, 200 percentages. Things could get pretty intense and spicy again. All right, so we have to watch out for that. And you can clearly see in the Ichimoku oscillator that it's on the verge of momentum to shift to the upside as well. All right, this is just my hypothetical TA, just my guess and what I'm seeing this indicator doing. And so I'm gonna watch for finger for the next week or two, and to see if there's anything consistent. And for more upside, that maybe, just maybe, I can go ahead and plan to get into some options and swing. Not financial advice. So I'm going to go ahead and show you guys what happened in the option statistics for finger motion after Friday's close. I'm not too sure if it's still there. But here, you notice that on top, for the $2.50 strike, there was a volume of a 1.38K in calls, none in puts. For the $2 strike, there was only 73 in volume, which puts it to 75 for puts and nothing else. All right, you can see that right here in the volume distribution. Then if we go to options, and I'm going to show you not July 18, but August 15, 2025 expiration date on this options chain, how the $2.50 strike saw a surge in volume with little open interest of 945, a volume of 1,329. So I wonder what this means. Then you have a big open interest here, 2,952, but just only little volume in the $3 strike calls for 12. So I'm just trying to understand this thing here. And if somebody knows something, I'm not too sure. I'm just guessing. But compared to the July 18 contracts, this is the most consistent. And November 21st, I don't see any volume there. January 16th, I don't see any, barely any volume there. And February 20th, I think they just added these this options chain, this expiration. I've never seen this before. So August 15, 2025, $2.50 strike calls is in question with this volume, this spike in volume. All right, not financial advice. So the question to Danny, if I think finger has hit the bottom, if everything is aligned with what the chart is saying, in my perspective, in my opinion, the answer is we'll just have to find out next week. No. I mean, I want to be really positive and say that yes, that this was indeed a bottom and a retest of previous support, because finger is definitely familiar and knows very well that $2 level where it retested in the past many times, and the fact that it's still above the 200 daily SMA, that could definitely be a bullish indicator right there too. So in my opinion, and this is why I left an alert for 215 And I'm also going to leave an alert for 225 in case, because if I know that it hits 215, then something is going on with finger, and then that means it looks good for the rest of the week. If it falls below $2, then that whole thesis, that whole scenario, it gets written out. All right, so that is my take on finger. Now, speaking of William, I'm not gonna lie. I was looking at Railtown, and Railtown looks pretty damn good. I'm just saying, in the way that it has been moving since May 19th at a bottom of 22 cents. And it's a very nice breakout on this chart, right? Even on the 4-hour chart too, it looks like it's on a roll with volume surging. And let me take a look at how the volume has been acting. It looks like it's been up and down, ranging. Like, I don't see any crazy volume that screams like, oh my god, like this is gonna like go crazy. But the highest since May 19th, the highest volume that I see here, let me see, 424.95 thousand, 456.92 thousand, 562.12 thousand for June 25th, 490.57 thousand for Thursday's price action on the daily chart. God damn it. Okay, that was Reddit. Biggest volume at my mom's house. The thing is, if that's all the volume that Railtown has to offer, if it's not anything above 1 million shares traded, then that's not going to be enough momentum for Railtown to rail it in the tunnel and go sky high, like somebody claims. You also got to look at it from both sides. And you're like, what if this was just another retest of the last resistance back last year in July? What if this is all just a cycle? You know what I'm saying? Like oh, we are retesting July July 10 highs at 62 cents. And then once it reaches 62 cents again, it'll be a year since. And then all of a sudden, it does the same thing and it starts to come back down and pump and dump. You know what I'm saying? So history can repeat itself once more. And then all of a sudden do this. Where we at? This. All of a sudden, it does this again. Oh, damn, what the fuck is this? Okay, hold on. And then this happens. Oh, wait, actually, let me go a little lower. No. You know what? Hold on. Let me do it from here. Okay, there you go. That makes sense. Alright, so what if, then what you got looking like here is, sort of like like a double top. Look at the weekly. You know what I'm saying, Matt? You know what I'm saying? It's just a retest from last July's highs of 62 cents. And that would be the bearish case scenario for Railtown, in my opinion. Double top. And if that doesn't happen, hold on. And if he's bullish like he says he is, then maybe it'll go the other way and start making new highs. Let me change the color here. Let's do green. And let's do red. There you go. How about that? How about them apples, Matt? How about them apples?
How about them apples? Huh? Let me know what you think about that.
So we'll see what happens in the next week or so. If it's going to take the bullish case scenario and double top, or if it's actually going to run it up on a week-and-week basis. Actually, let me just stretch it out a little bit more like that. Anywho, right? Blung, blung, blung. How do you like that, Matt? How do you like them apples? Beach? Even GTI had some 10 million days. Yeah, it had even 30. I think it had 30 million at one point. And it was explosive, even more explosive than Railtown. But obviously it was, nonetheless, it was just a short run, short but explosive run. Ran for like a week or so, and then that was it. Let's take a look at what's happening with GTII. Good Lord, I mean, look at this. What kind of activity has been going on with GTII during the past couple of months since February? And what's funny is that you have these massive candles going up and down from like 4 cents to like 20 cents, 15 cents, up and down. Like you had a day where there was like 40,000 shares traded, but it had been in this range for some time and above the 200 SMA, the daily 200 SMA. It's pretty interesting. But yeah, like I said before, the daily, you're talking about volume. Yeah, I mean, like, remember the volume from October's run in 2022. Compare that with real time. Like, what are you talking about? Yeah, look, 6.23 million. You had 6.98. You had 8.72, 7.42, 6.52, 8.48 million, 8.54 million. That's what you need for Railtown. If you want some serious action, you need some serious volume. You need some serious attention from institutions and retail altogether. All you can think of. You want whales in this? You want a whole bunch of money to go in this? That's what you need. Let's look at G-Bucks. What's crazy about G-Bucks? It looked like it was. I mean, you had a similar situation when you had a double top happen here back in February. What? February 18, 19. Here it reached the same top around here, around April 7th. Then it tried to do another, bounce up, but it failed at 6. And then came all the way back down to like as low as 1 130 and almost started ripping back to the upside. But once again rejected here. Less rejected off the 200, the daily 200 SMA. As a matter of fact, what the heck is G-Bucks doing on the Fintel? Oh, G-Nuts. G-Nuts. No, G-Bucks. What is that doing? 3 days ago, there's no data on the short shares available. Cost to borrow is pretty low at 4.82%. So I think this is controlled, in my opinion. But I could be wrong, of course. I could be wrong. Who knows? Who knows what would happen? Do I know? I don't know. Sheesh. Let's see what we got. Let me see. G-Bucks. Did I do Railtown here? Let me see. Oh, my glasses are hurting right now. Alright, let's look at Railtown. What is Railtown Technologies looking like right now? There's the cost of borrow fees. Still low at 5.43%. You got 85,000 short shares available as of 12:55 p.m. Eastern Time on July 3rd. Still got some short shares available there. Let me take a look at let's take a look at Finger right here. Finger looking good. Finger looking good here. Finger looking good on the cost to borrow. On chart exchange looks like 400,000 short shares available. 23% cost to borrow. What do we got here? What do we got here for what? As a matter of fact, let's look at Wolf Speed. Since we're on the topic of cost of borrows. So we got here as of July 3rd, 10:36 a.m. Eastern Time, with only zero shares available, and the last cost to borrow fee percentage was at 492.10%. That thing is spiking just a little bit more. And if we take a look at Webull right now, we can take a look at Wolf Speed and see that well, it was there before, but not anymore. They took it off. They had a cost to borrow fee percentage of 655, I believe, and it was climbing up a lot higher. At the moment, we see Wolf Speed currently at $1.22, up 3.39%. We don't know what's going on here. I know that they've been restructuring their debt and also trying to get the CHIPS Act grant to pass, but if it doesn't get passed by Trump, then it might go bad for Wolf Speed, in my opinion. So we're gonna have to see what happens this week. As you know, it's been going off. It's going off for a little bit, but we do have to be careful because this is a high risk and high reward type of play. We did see a couple of swings left and right. It did close at 52.63% as of Thursday. So we take a look at the price action for Wolf Speed on the 5-minute chart here. As we saw on Thursday, which was a half day, you can see that it was trading in the early morning at around 75 cents. Jumped after market open, jumped all the way as high as $1.34. If you had missed that swing, oh my god, it would have made you a good amount. And it had consolidated throughout the rest of the day and closed on the way down to 116 from 134 or 135. Again, right now it's currently at 122, still a little bit lower than what it was, but still holding on. We don't know what to expect. Let's talk about something, another ticker here. I'm moving a little bit fast here because it's getting a little late. I do need to go to sleep for work. So let me see. Let's see what's going on. Real quick. Let's see what's going on real quick. Let's take a look at oil. All right, oil is kind of holding up a little bit there, just above $66 a barrel. It was at a low of 65.52, and just watch out for, a break above 66.20. If it goes above the 200 SMA, 66.30, might see this go at 66.60 and beyond. We might be seeing a surge of oil, so let's see what's going on. I might be wrong here. Might be going on a downside here. Let's see. Excuse me. So yeah, see, I think it has to hold above 66. If anywhere, this would be the support for crude oil for now. Right around 64. Oh shoot, I can't do it anymore. I'll just leave an extended line here. 64.80, around that range as support. See if that also bounces up. And if that does bounce up eventually, you would have to see oil stocks follow. Precious metals, as a matter of fact, here also consolidating, yet it's pulling back right now. Oh yeah. Oh, and I can't believe it. Crude oil. Wait, silver earlier this evening reached a high of 37. Whoa, wait a minute. Oh, really? So it actually reached a high of $37.22. No way. But then it fell right below the 200 SMA and starting to go on a downtrend right now. Darn. Okay. So that means the dollar index is actually climbing up. There you go. It's moving up a little higher. If that's the case, Bitcoin is actually rejecting. It's found a bearish crossover with the 920 EMA. So you see that blue line that represents the 9 EMA cross below the 20 EMA, which is the orange line. That's a bearish crossover, which leads to more downside, and you would have to see Bitcoin retest that 200 SMA at around 109,000 again. If it breaks below 109,000, we could be seeing more downside, and that includes the rest of the market. Okay, ouch. Good morning, good evening, either the two. Zoe, nice to see you on here. Much love to you. Hopefully everything is going well. Might be just a little tad late because I will be ending the stream a little bit soon. But I'm glad that you could make it to the stream before that happens. And I've covered a good amount so far. And yeah, shout out to everybody else who joined the stream for the moment, including Matt, Moisley, Eric, Danny, Yakino, Maximilian, and yeah, thank you. Thank you to everybody for showing love to the stream. Just for the moment. Just trying to figure out what else. Plug. I don't know if you guys have been taking notice, but Plug Power looks good so far. Ow. Let's see what else is going on here. Let's see. Oh, 2 days ago by Market Beat. Stock story? Let's read this real quick here. Oh, okay. So last week, shares of fuel cell technology Plug Power had jumped 26.7% in the afternoon session after the U.S. Senate revealed changes to a GOP tax bill that extends hydrogen tax credits. The updated bill pushes the expiration of these crucial tax credits to January 1st, 2028, giving hydrogen producers a 2-year longer runway to scale operations and make green hydrogen more cost competitive against fossil fuels. Hey, okay. So for a company like Plug Power, which has been investing heavily in hydrogen production facilities, but has struggled with profitability, this extension is a significant policy tailwind. The credits help lower the net cost of producing clean hydrogen, which could boost demand from industrial customers and improve the company's path to profitability. This news provides a much-needed boost for the stock, which is still down significantly over the past year. And on that day, the shares had closed the day at $51.50. So we take a look at Plug Power. Since then, you can see that comeback. It was at a low of 69 cents as of May 16. And because of that, it looks like a lot has been getting on board, accumulating on shares, and volume has been rising more than ever, in my opinion. And it looks quite interesting because it looks like a cup and handle and about to break out. But it also, and like, this is very crucial, that daily 200 SMA plays a big part, because anything above that and beyond is bullish. But if it rejects the daily 200 SMA, then it could not be a good thing, and it could be bearish. All right, so just keep in mind that, and I'm going to be repeating that all the time. I'm going to be going over this. So yeah, a lot of things it's going to be repetitive, but it's also very important to know these signals, to know these indicators, and to know what's happening to the stock in the long term and short term. In my opinion, not financial advice, as you know that this stream is for educational and research and entertainment purposes, and none of this is financial advice. You have to do your own research, your due diligence, and you are your own decision maker of your investments. So we're also going to be keeping a close eye on Plug, because if that's the case, and on top of that, We take a look at the latest news 2 days ago. How a government loan changes the game for Plug Power here by Market Beat as of July 4th. The story surrounding Plug Power has been one of ambitious vision one of ambitious vision shadowed by a persistent question. How would it fund its massive growth plans without perpetually burning cash? And that narrative has now fundamentally shifted. The conversation is changing with the finalization of a $1.66 billion conditional loan guarantee from the U.S. Department of Energy. This sounds familiar. I think we discussed this many months ago. Many months ago, and I think now it's coming to fruition and it's coming into play. So this event should serve as a powerful government validation of Plug's technology and okay, this is pissing me off. Central role in America's hold on. This event should serve as powerful government validation of Plug's technology and its central role in America's clean energy future. For investors, the focus now pivots from financial risk to operational execution, potentially recalibrating the stock's long-term value. So how $1.66 billion changes everything. The Department of Energy loan directly addresses the primary concern that has weighed on Plug Power's stock. It provides a clear financial runway to build out a planned network of up to 6 green hydrogen production facilities across the United States. For investors, the impact is multifaceted and significant. You have lower cost capital, which this loan is a much cheaper source of funding than issuing new stock, a process that can be dilutive. Right? So share dilution occurs when a company issues new shares, which reduces the ownership percentage of existing shareholders. By using this loan, Plug Power protects its investors' equity, which hence results in that upside, as you saw on the chart, in my opinion. A clear path to scale. The capital is designated explicitly for building out the company's production network, providing a clear funded path to achieving commercial scale and reducing reliance on third-party suppliers. Government endorsement. The Department of Energy's backing signals that Plug Power is a strategic national asset. This validation lends a new layer of credibility to the enterprise, which can be crucial for attracting future partners and customers. Right? So, did you get the point here? So Plug Power's production network comes online. So with a more straightforward funding path, the focus turns to Plug's ability to execute its vertically integrated vision, and recent milestones show tangible progress. The company's goal is to control the entire hydrogen process, from producing the fuel to manufacturing the machines that utilize it. This control is key to improving gross margins, which measures a company's profitability on the products it sells. All right, so you got the Georgia and Louisiana plants. So the company's facility in Georgia is the largest liquid green hydrogen plant in the North American market. Following that success, the new 15-ton per day facility in Louisiana is now commissioned, bringing Plug's total U.S. production network capacity to approximately 40 tons per day. Commercial validation. In June 2025, Plug signed a multi-year supply agreement with a major U.S. industrial gas company, demonstrating clear commercial demand for the hydrogen produced by these new plants. And next up, Texas. The green hydrogen plant in Graham, Texas is slated to be the first project to utilize the Department of Energy loan, with a target to begin drawing funds in late 2025 or early 2026. So keep that in mind. Financial advice. I'm not going to read the rest, but you get the idea, alright? And so far, this is the result ever since that news, and we'll see how things move forward for the next couple of weeks. Hmm. Wolf speed is actually on the climb currently. Wow. Okay. You see some number of shares piling in on the time and sales. Big numbers. And now it's at $1.29. Actually, no, $1.28 right now currently. So retesting the last high here at 131. We're seeing if this is actually going to be a breakout or if it's actually going to be a bust and fall right back down to see if it actually breaks below $1 or not. So cross your fingers. We'll see what happens. Um, speaking of days to cover, I was mentioning about days to cover before. AMC, I don't know why, but I remember, and I don't, I mean, well, we'll see. Was it this? Was it this? No. Oh, okay, it was this. Okay. So I think I was reading upon this analysis. Oh, yes, it was this. It was this. Okay. Now, again, this is all speculation. All of this is just in my imagination, and as you know, myself and ChatGPT are having a conversation together. Just playing make believe and just being hypothetical of what would happen if certain things happen with the supposed MOAS and with the realistic chain of events. With what's been happening with with what happened recently. All right, with the refinancing debt, or the new funding to the refinance debt, and which was, of course, $200 million in new funding to secured to refinance the debt, $223.3 million in new 7.5% senior notes due 2029, the conversion of $900 million plus of older debt into equities and securities, and potential equities dilution of up to $337 million, and stuff like that, right? And we had discussed that. I think that was somewhere around July 1st. I'm not too sure. Don't quote me on it. I was talking about a lot in here, and then I decided to look at Fintel, and I gave out this the screenshot. I'm gonna show you right now, and this is something that really caught my attention, and it kind of gave me vibes of when Fingers days to cover started spiking up like crazy. Remember that? So now all of a sudden out of nowhere, you have, I can't even zoom into this, but I know it's a little small, but if I can read this out to you, the short interest for AMC is a 62,654,172 shares. The short interest ratio was at 17.35 days to cover, and this was July 1st, by the way, when I took the screenshot, July 1st. So the short interest percentage of float had also went up to 14.54%. Not only that, but short shares availability was at 1,600,000, which is still pretty high to me, and the cost to borrow was only at what 0.67%, which is barely anything at all. And what it said here, so it had a, so ChatGPT had a supposed updated AMC squeeze tracker for July 2nd, and it tells the price at the close and after hours. But here, the short interest 62.65 million shares, the interpretation was that it's elevated and building base for a squeeze, supposedly, apparently. Alright, this could be wrong, as you know, ChatGPT can make mistakes. Then on top of that, the short interest percentage float at 14.54%. States here the interpretation is that a borderline squeeze territory would be around 15 to 20% short interest, which is the key for that to happen. Days to cover at 17.35. The interpretation is that that is extremely high, and shorts could be stuck if volume spikes. So if volume were to just spike out of nowhere tomorrow during market hours, the shorts could be in trouble. Now the off-exchange short volume percentage was at 56.74%, so over half of the volume is dark pool, which is a sign of potential suppression, which has been the case for a couple of years. The short borrow fee percentage rate, 0.67%. Like I said, low cost to borrow leads to shorts still comfortable for now. Short shares available dropping from 3.3 million to 1.6 million means that shares are tightening rapidly, which could be early signs of pressure. And utilization is not shown on Fintel, but inferred at 95 to 100%, so likely high based on borrow activity and availability drop. Now, here's your interpretation. Alright? Short interest is rising. 14.5% float shorted, which equals to solid squeeze base forming. Days to cover 17.35, which equals to critical vulnerability. So if AMC's volume spikes even modestly, shorts can't exit quickly. Short shares availability dropping by 50% intraday, which means that brokers are running out of lendable shares. Cost to borrow rate at 0.67% is still too low to apply real pain. This must rise 10% plus, but ideally, if you really want that true squeeze momentum, you would need AMC's cost to borrow rate to be over 100% and beyond. And dark pool ratio at 56.74% equals potential sign of off-exchange volume suppressing price action. So, in this section, not financial advice, is AMC a short squeeze incoming? Now, ChatGPT says that we're getting close, but not yet in quote-unquote MOAS ignition territory. So the first trend, again, short interest, current status at 14.5%. I do need to check the updated Fintel report on AMC. So after this section, I'm going to go to Fintel and I'm going to see what AMC is at now on Fintel. So the needs for MOAS trigger supposedly is anywhere from 18 to 20% and even more than 20% in short interest. Cost to borrow again needs to explode. Alright, cost to borrow for AMC needs to explode past 50 to 100 and even more percentage. Shares available, of course, dropping, but it needs to drop a lot more than 1 million, and it needs to go back down to 0. The options chain, which is not shown on the Fintel data, it needs the gamma ramp heavy open interest at the 3 to 5 strike calls. Retail volume currently weak right now, but if you want this trigger to happen, you need that surge based on catalysts or media trending events. And if something were to happen, hypothetically, if the SEC were to crack down on naked shorts or the threshold list like FTDs, oh, you best believe that something will probably happen then, in my opinion. So now that we saw these numbers, again, we'll take a look one more time. Alright, so short interest, 62,654,172 shares. Short interest ratio at 17.35 days to cover. And short interest percentage of the float at 14.54%. Now, fast forward to today, July 7th, 2025. How is it looking like now? Oh my God. Are you serious? Zelly, everybody who's on here, can you see that number right there on the days to cover? Whoa. Wait, hold on. Wait a minute. So you telling me from 1735, July 1st, 17.35 days to cover, to now 32.20 days to cover? What? Oh my God. And then the off-exchange short volume ratio dropped from 56.74% to uh-oh. No, don't short me now. Don't short my stream. Don't do this to me. Please. Please don't do that. I beg of you, please don't do that. Don't do it. Don't do it. Come on now. Don't do this to me, please. Don't cut me off. This is important information. This is massive. Come on. I need to take a screenshot of this. I need to take a screenshot of this. This is crazy. Oh my God. Please. Am I still good? Am I good? Please tell me I'm still good. I didn't freeze, did I? Oh, I need to post this on. I need to post this on here. Cause this is one heck of a freaking update right here. Oh no. It doesn't let me post any more pictures. Are you kidding me? Shoot. Alright, I'm gonna have to write this manually then. Wow, okay. Alright. Oh, thank you, Zali. You're the best. So I'm gonna have to just do it like this. I'm gonna have to do it like this. Okay, here we go. AMC, Fintel, update. All right. Let's check out the volume. I mean, no. Oh, well, the short shares availability had risen yesterday, so it's back up to 2,100,000. And the cost to borrow for today is 0.63%. So it's still not high where you want to be. Obviously, you want to see triple digits and above that, right? So let's see. I'm going to do it like this. Did it go through? Hmm. Timestamp short shares. Hmm. If I do. And excuse me. So I gotta do this all. Excuse me. Alright, let's see what happens if I just. Okay. Okay. So, alright, so here's the update. So, key short interest metrics: short interest 62,654,172 shares. Very high, right? Short interest is very high, which leads to consistent pressure. Short interest percentage of the float 14.54, still the same. It's still the same. So nothing has changed, but it's still borderline squeeze ready, apparently, from what ChatGPT is saying. So 15% and more is key threshold. So it has to break above 15% and even above 20%. Days to cover now at 32.20, meaning it's extremely elevated, which means shorts could get trapped. Off exchange short volume 1.22 million shares, subdued versus prior update. And dark pool ratio now lowered it to 35.83% from what was it? From 56.74%. So that means that there has been an improvement from 56% and shows less suppression. So the key insight, right? The key insight is the days to cover rising to 32.2, which is a massive red flag for shorts. And any volume burst could cause panic, and that alone is enough to set up a squeeze scenario. Apparently, according to ChatGPT, not financial advice. Okay. So, short interest is near the trigger zone. Days to cover, shorts extremely vulnerable if volume returns. Short share supply, down from highs, but not zero. It still needs to be zero, okay? Cost to borrow needs to be over 100%. So that 0.63% in cost to borrow fees is still no pain. it must rise. Dark pool volume improving, so lower percentage equals more transparent trading. And gamma ramp, which is weak so far, but needs $3 strikes and above to see options pressure, and especially on that gamma ramp. So, according to ChatGPT, what to watch next this week for AMC, as we go ahead and go straight to AMC's chart right now, as we look at the current price right now, which was at $2.95. All right. The call open interest built up. We have to see. Well, we got to track. Let's see, what's the next options here? July 11th. All right. We need to see the open interest climb from July 11th expiration to the 18th of July expiration dates. All right. Then cost to borrow spiking. It needs more than 10%, and then it needs more than 100%. The daily volume, which is usually at an average of 50 million or below, but anything higher than 50 million, so like let's say up to 100 million, it could force partial covering. The threshold list violations, like the failure to delivers spiking or FINRA alerts, and then of course it needs news catalysts, so either earnings, which is actually coming soon. All right, so AMC's next earnings date, if we can take a look here, would be somewhere August 6th, Wednesday. August 6th, Wednesday, pretty sure after hours, like it always is. And there was an article here by Reuters 3 days ago titled AMC tries to stick the meme stock landing. So I'm pretty sure this probably might be another hit piece, which I'm not going to read right now. Oh my god, wait. Look at this. 3 days ago by Access Wire. How do you... Look at this. Lit Exchange announces headquarters in Rockwall, Texas. Nears 1 million crowdfunding goal, and goes viral with anti-Wall Street ad targeting retail trade restrictions. Oh my god. Let me read this real quick. A retail brokerage being built for transparency, freedom, and retail investors, launching a movement against Wall Street manipulation. Rockwall, Texas, Access Newswire, July 3rd. Lit Exchange, the fintech firm creating a new stock and crypto brokerage for retail investors, proudly announces the establishment of its corporate headquarters in Rockwall, Texas, as it approaches a major milestone, $1 million raised through its active regulation crowdfunding campaign. The company invites retail traders and everyday investors to become founding members and own equity in the platform they are helping to build. And this is the quote by Marcel Kalanovic, who is the co-founder of Lit Exchange, saying this isn't another Wall Street brokerage. This is for retail by retail. We're coming to empower retail, expose market manipulation, and give investors the tools Wall Street never wanted them to have. While other brokerages are restricting what retail traders can buy, we're building our platform around freedom and transparency. No dark pools, no restriction, and no BS. Wow. And then something happened here which is all like coding. Let's see. has integrated cutting-edge language models into its platform to deliver financial data based on your watch list and preferences, AI insights into trending stocks, news and market sentiment, investor education, and swarm intelligence capabilities. By building with OpenAI's GPT-4 API, LitExchange puts institutional-grade intelligence into the hands of everyday investors. Viral campaign challenges Wall Street's Goliaths. LitExchange's latest ad campaign, titled "No Dark Pools, No Restrictions, No BS," has resonated with frustrated traders across social media. The ad, which calls out the manipulation and centralized control across legacy brokerages, is gaining traction just as platforms like Robinhood, Fidelity, and others continue to limit trading access to popular retail stocks like GameStop, AMC, Finger Motion, and Genius Group. Listen to that. Listen to those stocks that was just listed. GameStop, AMC, Finger Motion, Finger Licking Good, and Genius Group, GNS. Keep that in mind. Retail investors are being silenced and robbed in broad daylight, strong. Kalanovic said, "Their trades are constantly being restricted and front-run. We will not allow that to continue. Lockdowns spark outage. Retail needs this new platform. Retail trust in major platforms has eroded." Investors remember the 2021 legalized crime against GameStop, AMC, and silver ETF investors. Over 50 securities were made position closed only by hundreds of brokers. Millions of retail investors lost out on billions of dollars. And there was an image here. Robinhood forced users to sell key cryptocurrencies including Solana, Cardano, and Polygon following regulatory pressure. Users were blocked from transferring assets to external wallets, effectively forced to sell at market prices, with some reporting significant losses. These forced liquidations echoed earlier issues from 2018 to 2022, when Robinhood prevented crypto withdrawals entirely, offering only sell-side exits. Meanwhile, the collapse of crypto firms like Celsius, Voyager, BlockFi, Bittrex, and most notably, one considered a darling of crypto, further exposed the dangers of centralized control. As Marcel stated on X, billions of tokenized stocks backed by nothing, allowing short sellers to manipulate stock prices when there were no shares available to short, and Bittrex did the same. BlockFi and Celsius and their withdrawals. Now Robinhood is pushing token-backed securities as if it's good for retail investors. Their number one revenue source is payment for order flow from the same institutions that benefit from tokenized stocks. Be a founding member. Help build the future of finance. And so if I'm going to read the rest here, it's really hard for me with all these other coding and stuff like that, but this was what was being said on that post on x.com by Marcel Kalanovic. That's it, which is really empowering and which is a big deal. A big move on his part and the founder to be able to build this brokerage and be only for retail and by retail to stop the the restrictions and all these other things that have been going on for many decades, and killing retail's portfolios, and a lot of things that have been hidden from retail, and transparency is all it's what it's all about. It's crazy, but kudos and shout out to Marcel Kalanovic, and all the best. I'm very surprised to actually see this article here from Access Wire, and yeah, it's a big deal. But yeah, going back to AMC, that is going to be that's gonna be the main focus for this week, and what to watch for. And This is gonna be interesting. I mean, what are the odds if the days to cover continues to spike? Then all of a sudden it starts to drop, and then all of a sudden the cost to borrow starts to spike up, which is kind of familiar with what we saw with Finger. Remember that? Yeah. That is something similar to what Finger did. All right, and I can go back to that situation where if we take a look at what happened May 14, you can see here that Finger had a big spike in cost of borrow fees, all the way up to like 319%. Take a look at another screenshot here on ChatGPT if I can find it. I'm pretty sure it's somewhere here. I've posted a lot of information here, right? So here, an example from the beginning, right? As of, let me see, this was back in April 2nd, when Finger was trading at 145 with a base to cover of 11.95, then spiking again to 13.14, then once again spiking. Let's see if I had updated that. Let's see. Oof. I know it spiked, but then eventually the cost to borrow started spiking, and then so did, and then the cost to borrow, then the days to cover started dropping afterwards, in my opinion. So let's see. Okay, I think that was that it? It had been a while since I covered Finger. So, just looking back, if this was the case, this could pull what Finger did before, and then all of a sudden we see a surge in volume coming out of nowhere. So if we could be hypothetical about this, and you can see that the momentum is trying to shift here on the daily. Mind you, if you take a look at what's going on in the overnight trading session, we still have that resistance at $3 for AMC, and it's at $2.99 currently. And it's been having a really tough time trying to break over $3, as you can tell. But perhaps this could be something to take advantage, or it could be something that you probably say, well, you know what, let's wait and see what happens. In my opinion, that is wild, and I am just wondering what could be next for AMC this week. So we'll have to stay tuned. We'll have to see what happens. And as Zelly mentioned here, the max pain for AMC this week is $3. So it has to climb over $3 for sure. It has to climb over $3 for sure. I don't really see, well actually, I do see somewhat of a visible gap here. It could be wrong, but somewhere between this daily candle, somewhere around this daily candle from Monday Monday the 30th to the one on July 3rd, and that's somewhere between 296 and 303. So it's not much of a big deal, but if you can actually get the momentum to come back to the upside, as you can see of the Ichimoku oscillator, looks like it is trying to climb back up, especially if it goes right above that 13 EMA line, which you see there. And you can track with the way that it looks like from when it had its last rally here, and after it had rejected the daily 200 SMA back in May 27th to the 28th, a P&D. And I actually noticed something. I noticed another gap. Alright, take this with a grain of salt, but there's another gap here. And this it'd be somewhere between 325 and 328. I want to say round it off to 330. So we have two gaps here, supposedly here to fill if it comes to fruition. So you have somewhere around 3 to 325 to 330, around this range. If this week we see that volume surge and all of a sudden things start to go a little crazy, then you could but possibly take advantage and go on a swing. Who knows, depending on what you like to do. Up to you. Not financial advice. But it literally looks interesting to me. And we'll see what happens afterwards. If it actually holds and breaks above, or if it actually fails and continues to go back to the downside below 280. And that's also, of course, what and if something happens with the markets, and if it continues to decline very hard, then that could change everything and the trajectory of all the stocks that we're talking about, leading to more downside. So yeah, Michael Anthony, what's up? I actually realize it's 1:22 in the morning. Jesus, or I have to wrap it up quick. Clove since earnings has upgraded to 450 to 6. That has 160 million of cash with no debt to close. 258. That being what? Upgrading the company since earnings has the right healthcare plans. Yes. Take a look at this. I know Clove had been on a decline like you couldn't believe, like since the last time we were talking about Clove. And it had been on a consistent downtrend since here. Actually, as a matter of fact, since it reached the high of 487 back in January 24th. So since January 24th, on a downtrend and breaking below this daily 200-day SMA, which of course signals a lot, signals that it's bearish and it could continue to the downside. I'm not too sure. Does it trade the 24-hour? No, it doesn't. No, it doesn't. So here it says first quarter earnings outperformers, Clover Health, and the rest of the health insurance providers stock. Next earnings is August 11th. It's not so far away. Just a month ago. A month away. Even though they did report earnings per beat, the revenue was down by almost 1%. And that leading to a drop in share price, as you can see here, on the 4 hour. Wondering if this is testing another bottom. I want to say somewhere around maybe 250. If it can hold 250 and try to come back, maybe that would be a signal for a bullish cycle to start again. But as long as the rest of the moving averages continues to go to the downside, I mean that can be played out and probably see more downside, which hopefully it's not the case. And if that fails, and with the market sentiment and all that, you either have 250 to be the support or $2 a share, which was at once upon a time a level of support resistance. I mean, it looks to me that perhaps that would be the bearish case scenario. It would have to hold above 250. This would actually have to start turning back around, start moving to the upside here. But as you were talking about the price targets, the analyst price targets actually, as you can see on the forecast, you do have 2 analysts with a strong buy rating and 2 with a hold. And the highest rating price target is $6, the average at $4.69, and the minimum at $3.75. Current price at $2.56. But the technicals in terms of the 4 hour, let me see, is a strong sell. I think in general, yeah, it's technicals are saying strong sell, but the analyst rating is at a buy, an average. So I'd say I want to see what Clove can do leading to the next earnings date, August 11th, and if it ends up staying above 250 or it ends up falling a lot more, then it shouldn't be, in my opinion, not financial advice. Alright, so that's my take on that. Let's see. Oil is actually rising back up again. So it actually did break over the 200 SMA. So far, trying to hold above 66.30. It was at 66.36 just a few moments ago. Try to see if it actually retests 66.60 and breaks above that. Let's see, gold on a sell-off. Silver tried dumping like crazy, but it came back, it bounced back up. So precious metals currently in the red. The dollar index still climbing up little by little, so it's trying to gain strength. And Bitcoin is struggling to stay above 109,150. You do have a signal there on the downside, so it could be that 109,000 on the mark will play out to be the next support level, And if it fails and it breaks below that, and who knows where Bitcoin could drop again? Maybe at 108,003. So this will be the range for now, in my opinion. So we'll take a look at that. The Japan markets are down negative 0.36%. All right, so that's gonna be it for that analysis on what's happening currently. If anything else, I mean, we'll probably find out and discuss it on Discord in terms of what's happening with the stocks that I talked about. Oh, wait, what is this? Whoa. Okay, so we're seeing a little bit of a sell-off on Wolf, trying to come back down to break lows. Have a rejection on the MACD here on a bearish divergence currently. So I don't know. Looks like it's having a real tough time trying to break the top where it was before, over 130. If it can't do that, then it might just lead to more downside. Might. Could be wrong, but we'll see if anything develops during market hours, which I will be streaming in the morning at 9:30. Tesla, on the side note, Tesla dropped believe it or not, from the close of 3/12/67 after hours to as low as $290 as soon as 8 p.m. hit earlier. It like literally just dropped a deuce, created a gap, and it's trying to hold off and consolidate, possibly try to climb back up from here and try to retest 305 or 306. So I was shocked about that drop there. I don't think there's anything else to talk about at the moment. Yeah. Wow. Weeble is down. Weeble is down negative 8.39%. Damn. Of course, you can't buy it because it's not available. Weeble can't trade their own stock on their brokerages. That's the rule. Just like Robinhood can't list their own stock on theirs. I think. I could be wrong, actually. Let's see. I'll take a look real quick. Can you trade HUD? Oh, that's hilarious. You can buy their own stock. Oh no, wait. Okay, I think. Okay, I think. All right. Never mind. Weeble can trade their own stock on their platform. But it did take a big drop, though. Weeble secures a $1 billion standby equity deal for strategic growth initiatives. Oh, okay. So that's the latest as of 3 days ago. That's the reason why it probably is down right now. Currently. Oh, I forgot to mention about GameStop. I just totally forgot about that. Hold on. GME. Oh, wait a minute. What? Okay, this is interesting. So even GameStop's days to cover is at 21.00, and the short interest percentage float is at 19.47%. But get this, 4 hours ago, um, there were no short shares available at that moment, and then they had posted 3,100,000 short shares available. So I don't know how that actually works. I don't know if that's just a reset or a glitch. I don't know what to call it, man, but that's weird. Let me see something here. Let's see, maybe if I go to chart exchange. Um, yeah, let me just check that out real quick. That is interesting. So GME. Let me just check that real quick. And then after that, I'm gonna end the stream. Okay, so, oh, alright. What did it say? 134? 134. 3,200,000. That's still a lot of shares to borrow. But that is actually really interesting though to see how GameStop's days to cover is 21.0, and the short interest percentage of the float for GME at 19.47, which is where AMC should have their short interest percentage to put more pressure on the shorts theoretically. Interesting. Well, what is GME doing right now? It's still stagnant, it's still flat, not even moving right now. It did close at 23.59 in the red, down negative 1.50%. So I don't know. God, things are getting spicy. But anyways, I think that's all we have for tonight. What is going on here? Jeez, my computer sucks. No need for words, just you and me. Lost in love, so wild and free. Yeah, something happened to my OBS. Oh, God. What is going on? See, I need a new computer ASAP. My thing is just glitching. But anyways, but yeah, that's all for now. Thanks everybody for, as I can't even talk because I'm tired. Thank you to each and every single one of you in joining me tonight on this late live stream. Shout out to Michael Anthony, Zelly. Much love to you. Thank you for being here, as always. The mods, Eric, Ju, Chinel, or Moisley, Matt, Eric. Thank you to Danny and Yakno Maximilian. Matt, I appreciate you. Eric, thank you, brother, and everyone else for being here. I will be I will be streaming in the morning, and we'll see what happens. Once again, we'll see what happens to the stream. And I wish you all the best for this week. And any other information that we run into, we'll share it on the Discord. Again, I will be in, it will be in the works that I will start that challenge, that Yield Max challenge, the Misty plus ulti. And yeah, I know what, I just need to do this. I need to do this for the sake of, making passive income enough for me to retire off of. That would be nice. I'm pretty sure everybody else would agree. And yeah, I wouldn't mind sharing my progress too. Gotta see how I do this, and see what the markets say. With that being said, so I'd like to say thank you once again to everyone, as always, for showing love to the stream here in the Lion's Den. And I hope everyone has a wonderful week, a safe week at that. Best of luck, and love y'all. And I'll see you in the morning. And again, everything and anything that was said on the stream was strictly in my opinion, not financial advice. This is for educational, research, and entertainment purposes. You're your own decision maker of your investments, as long as you're managing your risks, setting the limit, and making that money. You know what I'm saying? Because that's what truly matters. And you do not give back a single penny to them. Do not do that. No. You shall not give back a single penny to the market makers. You will take every single penny back from them and make more. Make more than what you wish for. Anyways, Lion of all trades, signing off. Peace out. Good night, and see you on the next Lion's Den.